Thank you very much, sir, for your message. Now I invite the Chief Regulations National Stock Exchange of India Limited, Dr. V.R. Narasimhan, sir, to give us valedictory address.
Sabhaku Namaskaram. Professor Vishwanathan Garu, dignitaries of the dais, I take it as a great pleasure and honor to be before you for two reasons. One, I'm talking before my professor who taught me, and I'm talking from a dais where I was a student like you all a few years back, 76, 78 batch of commerce. This department, Osmania University. I have all the great pleasure and I would say pride to say that a person from a humble background can also reach national heights, and I have been one such blessed soul in this country. I have an experience of watching the capital markets from very close quarters from 93 onwards. In 1993, I joined Securities Exchange Board of India, regulator, just fledgling regulator at the point in time. 92 was the year in which SEBI was established. In 92 end, I got an offer. 93, I joined SEBI as a division chief, fairly senior position within that system. After that, in 96, 97, I joined National Securities Depositories Limited, NSDL. We were setting up the depository system in this country. Depository, we did not know what depository was, but we took upon ourselves to learn and establish, and today we are flourishing on it. In fact, we are leaders as far as depository movement is concerned in the world. I'm not talking about India, I'm talking about the world. Then came an opportunity for me to work for a mutual fund as a chief compliance officer, looking after regulatory affairs, and today I am chief of regulations. Most of the words you have used in the last 2-3 technical sessions, some of them I directly handle in my official capacity as chief of regulations, National Stock Exchange. Call it pump and dump, as Mr. Professor Jaydev said. Call it insider trading, as many of the presenters said. Call it investor grievance redressal, some people were saying. All these things I do directly, regularly, on a day-to-day basis, using several techniques and tools. There are chain snatchers in the society. Not everybody is a chain snatcher. It doesn't mean that a woman cannot wear golden ornaments and go into the streets. They do go, they do floor show, they do enjoy all that. Indian markets are not so bad as to have warrant a title like this. I was one of those antagonists to Professor Lakshman when he said, I want to have this seminar. I said, don't do this capacity. I said, impact of reforms on frauds in capital markets, that would have been much better than saying that frauds. My dear friends, each one of you can invest into the capital markets in this country. You will benefit out of it. There's nothing wrong about it. Absolutely nothing wrong about it. The reforms that have happened, have worked in one way. They have taken away risk of intermediation. What is left back is residual investor risk. Residual investor risk has to be borne by the investor only. If you are going to invest in equities, if you are going to invest in futures and options, you are taking final and ultimate risk, which is investor's risk. If you are putting up a business, business can fail. And therefore, as an equity investor, you should have the guts and the understanding that this money can go. If you are investing in debentures, secured debentures, you are safer. If you are investing in fixed deposits, you will get some returns. When you took at real returns, it may be less than your inflation rate. These are various options. I am not recommending any type of investment in this. What I am saying is, the Indian capital markets are not as bad as is it made it to be. There are problems. I'll come to that in a few minutes, but then we have a lot of things to do. I'm addressing the academicians here, and therefore I would say that in the last 20 years or 15 years, several reformatory measures were taken, and please do a research on each of those things. For example, today ASBA is compulsory. How is ASBA important, or is it going to change the life of an investor in the market at all? A lot of things can be said about it. India is one of the 2 markets in the world which is having T+2 settlements. That is, every third day, investor will get money or shares for his trade done on the exchange. How is it making the life different. I remember when I was a student of commerce in 1976-78, there's one transaction I did for my father for sale of shares. I had to wait for 48 days to get a small amount of 8,000 rupees from a broker after 28 trips to him. Today, if you do not get your money on the 4th day, you can raise a complaint against the broker. Exchange will take away money from his deposits and give the money to you. As simple as that, plain and simple. T+2 settlement is a beautiful arrangement made for the investors. What is the impact of T+2 settlement on the liquidity in the market, on the investors in the market, and so much can be done. I remember, I don't know, some of the veterans and seniors would vouch for me. There's something called the bad debts in this market, which was bordering on fraud. They used to forge the signatures, forge the transfer deeds, forge the certificates, and so on and so forth. Simple terms speaking, printing a duplicate Infosys certificate is much simpler and much beneficial than printing a 1,000 rupee note. In a 1,000 rupee note, maximum benefit you'll get 1,000 rupees. Infosys 100 shares printing you will do, you know what's the value today. But today, because of demand, that's completely vanished in the market. There's no such problem at all. So what is the impact of dematerialization on the investors in terms of complaints? If you look at the corporate complaints, one of those things, I remember in first few days of SEBI, Mr. G.V. Ramakrishna, a company donates 192 acres of land to educational institutions. It's a listed company, 192 acres of land. 192 acres of land has been given to education institution. It's a very noble idea, but all the trustees of the education institution are promoters themselves. Okay, this is one problem we have. Similarly, we have got, let us say, the frauds are different nature. Out of 100 rupees of managerial remuneration, 98 rupees is given to the promoter director or promoter executive director. 2% is shared by 7 other directors. Can we say that promoter director is contributing so high compared to other directors? Is a question mark. Actually, you should see, I don't know how many of you are following, there is something called as a proxy advisory services shooting in this country. They're called green shoots. If you look at their sites, you will understand the kind of a corporate frauds that are being happening. They are not necessarily financial frauds in that nature, but they are governance frauds for sure. The concern today we have is, SEBI does not have, exchanges do not have direct jurisdiction on the companies. Other than asking them to disclose, they can at best name and shame them. They can say that please comply or explain. That's what we can do, but we can't do beyond that. That's where we are looking and struggling for the purposes of getting better governance. We are using all possible technologies. As Professor Jaydev was saying, we use a lot of data analytics to see that insider trading is identified, pump and dump is identified, front running is identified, circular trading is identified. There are 14 types of frauds or 14 types of fraudulent misbehavior of the market we can identify through data analytics and powerful computer programs. We understand them, we have alerts, we try to take action and submit the details to SEBI. Whenever you find that SEBI has fined somebody, SEBI has done an investigation, it is exchanges who do the investigation and give a report to SEBI. SEBI in turn takes evidences and books the culprits. Disgorgement is a new way of what you call asking the person who has made money, they are getting disgorged plus unjustified benefits, they are living penalty, and that's how they are trying to bring an order into the whole market. So corporate governance area is one area which is really we are actually struggling for. Otherwise, I think markets are good. We can always there. My suggestion to the university, looking at the interest that we have seen in the various amount of papers that are presented on the 4 heads of the seminar, it's we should establish a school or a group for capital markets research. More focused research can be done. And if there's a role for us to play, I will definitely personally contribute to the whole process. Thank you.